The next screen that we're going to review is the deductions screen of the master file. Now we're going to break this screen down into two sections. The top section of the screen is where you'll see a list of all of the deduction codes that are set up on this employee's master file, whether they're active or not. So any deduction that's been created at any point that is currently still in the master file is something that you would see in the list. Each deduction code has its own row in this list. And you can highlight a row or select a row, and then you have the ability to edit the row or remove a row. One word of caution on removing the row. When you remove the row, you completely erase the accumulated total. So if you ever add that deduction back into the payroll system, the system will not remember what amount had been previously accumulated. So for things that have annual limits, like the 401k or HSA or dependent care, you would never want to remove those deductions mid-year, because then if you added it back again at any point later in the year, the system would no longer remember what had been previously accumulated in terms of helping the system know when it had reached the limit. So keep that in mind. You could contact Ascentus and we could get that accumulated total back in for you, but you'd have to remember that it needed to be added. So it's just better to get in the pattern of never removing a deduction mid-year, especially any deduction that has an annual limit. Another comment would be to be cautious about removing any deductions that came from Ascentus HR. So Ascentus HR has the ability to pass benefit deductions to the payroll system. And so if the deduction needs to be removed, the better option would be to log into Ascentus HR and end the benefit for the employee in Ascentus HR. That will then pass over to payroll with an end date, or potentially even delete the deduction through that HR connector. However, by having it take place through HR, you're keeping your two systems in sync. So be cautious on any deductions that come from HR. If they need to be fixed, they should be fixed in HR. Don't make any changes to those benefit deductions directly in the payroll system. Let's look at the bottom section of the screen now. This is where you could come if you needed to manually create or add a new deduction into the payroll system. So the types of deductions that have to be maintained directly in payroll are garnishments, child support, 401k loans, and direct deposits. Those are a couple examples. There may be other codes specific to each client that have to be maintained directly in payroll. Some clients do opt to maintain the 401k contribution directly in payroll, although that is a benefit that could be set up to pass from HR. Let's go ahead and look at these different fields down here at the bottom by maybe working together to build a couple of deduction codes, or set up a couple of deduction codes for this employee. To start with, I'm going to click on the binoculars, and that's going to bring up a list of all of my available codes. Let's say, for example, that we needed to set up a child support deduction on this employee. We could highlight the code that we want to add and then click the Select button. Notice that when I click the Select button, a couple of the fields become pre-populated. The reason that these fields are populated with values is because this deduction code was set up or built in the control file. So let's minimize the payroll master file for a moment. Come out here to the utility screen, go into the control file, and look at the deduction screen. This is the screen in the control file where Ascentus can come in and create new deduction codes for you. When we build you a new deduction code, we have the ability to assign the number, assign a 10-character description, as well as assigning a default frequency. For example, should this deduction come out on all pay periods? Should it only come out when you manually add it to the check? Should it come out on the first check, only the second check, only 24 times a year, and so forth? So there's various frequencies that we can associate the deduction with. We can also associate it with a default calculation method. Is it going to be a fixed amount? Is it going to be a percent? So there's varying methods we can associate it with. If there's a global amount, In other words, if whenever this deduction is set up for an employee, the amount would always be the same, we could actually enter a global amount for the deduction. Or if there's a global limit, in other words, whenever the deduction is set up for the employee, the limit is always the same. We can set that up as well. So there's varying rules that can be just built into the code when the code is created. So any fields that were kind of predefined in the control file, those will just automatically populate when you select the code. So for example, I selected child support. The default built into that code in the control file is that it comes out on all pay periods. I do have the ability, however, to force the system to take this code just for this employee on a different frequency than what was built in to the code in the control file. So you could change the period or the frequency if you needed to. And then in that case, you would be overriding the default setting in the control file, and you'd be forcing this code to act differently than it was designed to act through the control file. You also have the ability to change the calculation method. The most common two options are flat for a fixed amount or net for a percentage. I do want to highlight that we do have a calculation method called percentage, but this doesn't actually do what you think it does. So I want to encourage you that whenever you need to set up a garnishment that needs to be a percentage of disposable net wages, you use the net calculation method and you enter the percentage in the field. If you're setting up a direct deposit and you want it to be a percentage of their net paycheck, you can use the net method and enter the percentage for the direct deposit. So again, to reiterate, when you're setting up a deduction, you can confidently use either of these options, flat if it's a fixed amount or net if it's a percentage. Be careful not to use calc formula, percentage, or product without contacting a Ascentus support, as these do not necessarily work the way you think they do. So let's take this example where it's going to be a flat or fixed amount. Once I select that calculation method, or in this case that was the default, so I can just tab through that field and over to the amount field, I can come in and enter in the dollar amount that I want to be withheld. What determines if this is a dollar amount field or a percentage field is the calculation method. So if the calculation method is flat, this is where you enter a whole dollar amount. If the calculation method was net, this is where you enter a whole number, which would in turn serve as a percentage. So this would be what 25% would look like. So let's go ahead and change this back to be a flat amount. We'll set it up to be $150. Oops. Sometimes you have to be careful about the where your decimal lands there. Let's talk now about the start date field. So the start date field actually can control when the deduction starts. That means that today might be November 14th, but I could come in here and set this deduction up so that it didn't start until December 1st. And I can add it into the system today and be confident that it won't be taken before December 1st. The start date field is looking at the check date of each payroll you process to decide if it's time to start the deduction or not. Once this date is before the check date of the payroll you're currently working on, the system will begin taking this deduction. It's optional whether you populate the start date field. You could leave it blank, in which case the deduction would start immediately, or you could populate it with a date from the past if you just wanted a record of when the benefit was effective. The end date field is another field that does work with the deduction code. It allows you to enter a date that you would like the deduction to stop, and the system will test against this date to determine when it's time to stop taking the deduction. The end date field is testing against the period ending date of your payroll to decide when it's time to stop. As soon as this date is before the period ending date of the payroll you're currently working on, the deduction will stop being included in the payroll. So again, the start date field is testing against the check date of each payroll, and the end date field is testing against the period end date of each payroll. We also have a limit amount field. So if you were adding a deduction where you wanted to set up a limit, so that the employee never paid more than a certain amount of money, you could go ahead and enter in that limit amount and then select the limit code to help the system figure out if that is a permanent limit. In other words, it should take this deduction out up to this maximum amount and then permanently stop. That is a fixed limit. Or alternatively, you could make it a flexible limit where it starts over again each year. In other words, is it an annual limit, a quarterly limit, a month-to-date limit, a pay period-to-date limit, or a permanent limit? Whereas once they reach that limit, it never restarts. Examples of times that you would want to use the to-date option would be with things like garnishments, where it might take more than 1 year to pay off, but once they hit the limit, you don't want it to start over again next year or next quarter or next month or whatnot. Another example would be a 401k loan, where it might take more than 1 year to pay off, so you want it to keep working towards that limit throughout the years that it takes. But once they hit that limit, it's permanently ended. You wouldn't want it to start over again next year or next quarter. An example of an annual limit, though, might be something like flexible spending or dependent care, where there might be like a $5,000 limit for the year, but once the year is complete, the employee can start contributing to that plan again up to that same limit for the next year. So that's an example of a limit that would reset from 1 year to the next. There's also a user code field. Now, I'll tell you that this field here is probably not something that you're going to be using. It's just kind of sitting on the screen as an option if we ever needed to write some sort of custom program for you that was working with the deduction screen. We have like a custom code field we could use. However, at this time, for most clients, this field is not applicable. Let's talk about the accrued field. So again, back to that control file. When a deduction code is being set up in the control file, there's an opportunity to mark if you want the program to accrue amounts not taken. What that would basically mean is if the employee, let's say the employee worked less hours this pay period, so they're getting a smaller check, and therefore they're not able to have the full amount withheld. If you have that feature turned on for that code in the control file, the system could accumulate or accrue the amount that it wasn't able to collect and place that in this field here and carry it forward to the next payroll. So that next payroll, it would try to take the standard $150 plus the extra $40 that was carried over from the last payroll. So that's the accrued option. Again, that field, that option has to be turned on in the deduction code itself, or the program would not do that by default. You could, however, manually populate this accrued field if you wanted the system to try to collect an extra amount of money on the next paycheck. Another thing to note about the accrued field is it doesn't work when the employee is not being paid. So it wouldn't work in the case of like an employee that went on leave of absence where they're not being paid at all. It's not going to just rack up accrued fees or accrued deduction amounts for pay period after pay period after pay period, and then the employee comes back and gets slammed with a massive amount of owed deductions. So that's not how it works. It's only going to work if the employee does get paid but doesn't make enough money to have the full amount of their deduction withheld. Now let's move on to the type field. When you're setting up a garnishment or a child support, you have the option to use our third-party system. And when I say the third-party system, I'm specifically referring to this tool. Let's leave the master file for a moment. Let's go out to the third-party screen. So I'm specifically referring to this third-party screen here, where you can come in and build a list of payees. You can assign each payee a payee ID and a name, and then you can also enter in the mailing address or even potentially set it up to be something where the payee receives an electronic transfer of monies. So this is basically our garnishment program, if you will. It allows you to set up the payees that you want to have the monies go to, so that after the payroll is done, the system's going to collect that money from the employee. there will then be a check that can be printed to the payee and sent off to pay them that money. Although I referred to it as our garnishment program, it really can be used for multiple reasons besides just child support and garnishment. I have seen clients use the third-party payee program for any time that they need to issue a check to a third party after the payroll is complete. I've seen it be used for paying your 401k administrator or retirement administrator. I have seen it be used to make the payments to the various employees' HSA banks where they've got an HSA account created, either by paper check or by electronic funds transfer. So it's been used for multiple reasons, but probably the most common reason is for garnishments or child support, where you set up a payee and then you can come into the employee's master file and add that child support or garnishment deduction to their screen, and then go ahead and associate it with our third-party program and select the payee that you want to pay this money to. So here I've said, yes, this is a third-party deduction, and then that opens up the field below so that I can select the payee I want to give this money to. I can also use the account or ID field to enter in a case number. So if there's a case number associated with this deduction, you can go ahead and use the field below here to enter that information. When you're done populating or manipulating the different fields here, then you need to click the Commit button to post or publish that deduction up into the list of active deductions for the employee. So now we see the child support deduction shows up here in the list. We can tell it's a flat $150. There is no limit to the child support, and we're starting it effective November 1st. So you can see at a glance information. If we needed to get back into this child support code, we could certainly highlight it and click the edit row, or we could double click on it from the list to bring it down here. There's a few other buttons available to you, such as undo edit. Let's say that we double clicked on a code so we could make a change. Maybe we changed it to 250, but that was the wrong change. We could undo the edit, changing it back to what it was previously. We can also undo the selection of the code to get back out of it. Notice that when I select the code, it brings it down here to the window where I can edit it. But I also see it highlighted up here in this green color. The reason that it's highlighted there in that green color is because that is my preference color. So out here under our preferences, you can set up your row selection color. It's kind of a nice idea to have that in place. Sorry, going to the wrong screen there. It's a nice idea to have that in place so that you can tell when you have something open. In this case, I can tell I have this child support deduction open because I see my preference color. And it's a good idea to make sure you have a big, vibrant, bold color set as your preference color, so it's very obvious to you when you have something selected. So that's an example of adding a child support deduction. I do just want to let's just set up another deduction here. We'll make it another garnishment. I do just want to briefly talk a little bit more about the calculation method here of net versus the percentage method. I want you to be very, very cautious about this percentage tool here, this calculation method. It probably isn't going to do what you think it does. You would think by reading the description that it's going to let you enter a percentage to be deducted. However, when you choose the percentage method, you then have to choose a basis. And we don't have as many options as I would like to see for the basis. For example, when you're setting up a garnishment or child support, it's supposed to be a percentage of their disposable income, which is really their net wages after taxes. So it's just really their wages after taxes. So in our system, the way that we achieve disposable wages is with this net tool or this net calculation method. If you want to set up a garnishment to be taken as a percentage of their net disposable wages, you have to have the calculation method set to net, not to percentage. So keep that in mind. Net is actually the calculation method you'll use for a percentage garnishment or a percentage direct deposit. Let's talk about another deduction type that has a special calculation method. Notice up here in my list how we've got a 401k deduction on this employee. Do you see the calculation method is S with a basis of 31? Let's just edit this row briefly so we can look at that in a little greater detail. This calculation method is actually set to special, and the basis is set to 31. Now, to better explain what that means, we're going to need to go into the control file again. So we're going to go out of the master file for a moment, and we're going to go into the control file. Again, the control file is located under Utilities. You can access it from there, or you can go under Quick Links, and you can access it from there. And the control file is what makes you unique as a client. This is where your deductions get set up, your pay codes get set up, your W-2 template gets set up, your general ledger program gets set up, the rules for employee self-service, your labor levels, your job title. So much takes place in the control file. Right now, we're going to specifically look at this screen here, Special Basis Codes. If you come to this screen here, you'll see a basis 31. Let's go ahead and edit that basis so we can open it up and look at it a little better. Basically, this is a basis for you to determine which types of pay codes are included as eligible for 401k wages. Basically, if an employee wanted to set up a 5% deduction to 401k, which pay codes could that 5% be taken from? So this gives you access to a list of all of your codes so you can define which codes they can contribute off of. For example, some clients do not allow employees to contribute off of bonus codes, or do not allow employees to contribute off of group term life insurance or taxable fringe benefits and so forth. So this provides you access to modify the list of eligible pay codes that can make up your 401k wage base. So that is what Special Basis 31 is. So when you're in an employee's master file, if you see that they're set up with a 401k to a calculation method of Special 31 or any other type of retirement plan with a special basis, that typically means that there is a list in the control file of which pay codes are eligible for them to defer off of. And therefore, this right here is not a flat dollar amount. This is not $5. This is instead 5% of the special wage basis for 401k. Another comment that I have for you about 401k, and this would apply to HSA as well, is that you don't have to enter a limit into the payroll master file or to build a limit into the 401k deduction code. The system knows, just by the pure fact that it is set up as a 401k deduction type, the system knows what the annual limit is. And that annual limit can change from year to year. So you do not have to actually type in, for example, 16,500 as the limit for 2011. You do not have to build that into the employee when you're setting up the code, and you don't have to build that in as a global limit when you create the deduction in the control file. The system knows what the annual limit is for 401k and HSA, and therefore you don't have to modify those fields. However, occasionally you might want to modify the limit field, such as if you have a highly compensated employee where they have a different limit than the rest of the employees. Perhaps this employee can only contribute $12,000 to 401k in order for you to pass your discrimination test at the end of the year. In that case, you might want to enter a limit amount for their 401k. Just keep in mind that as soon as you enter a limit in this field, you are overriding the system limit. And that means next year, if the limit changes for the system will not be controlling this employee's deduction. So if his limit needs to be changed, you would always have to modify his limit manually. Or at some point, if you can switch him to using the system limit, you would need to come out and remove, or come into his master file and remove any limit you had hard-coded into his deduction. Another example of modifying a limit on a 401k might be if you had an employee come to you in the middle of the year, be hired middle of the year, and they told you that they had contributed to 401k under their prior employer. You might decide to go ahead and set up a limit in here so that they can't contribute as much as the system might allow them to, so that it'll stop them, and that way kind of make sure that the employee doesn't go over the limit, doesn't go over the total limit for the year, even though they've worked for multiple employers. So you could do that on their behalf to ensure that they don't go over the annual limit. But you would need to remember next year to come in and remove the limit so that they can now begin using the system limit. Let's now talk about medical deductions. Beginning with 2012, it's mandatory that the employer cost for medical insurance appear on the W-2. So Ascentus has the ability to pass employer benefit amounts from HR. To do so, we would simply, in the control file, we would come in and we would create the medical deduction for the employee amount, and we would link it to a memo code to track the employer medical amount. That amount can then be passed from Ascentus HR. So Ascentus HR can pass both the employee's deduction as well as the employer cost for medical insurance. So when we're looking at the employee master file, you might see certain codes that have this little chain link. That indicates to you that this deduction is linked to another deduction. So I can tell by going into the control file and looking at this medical deduction what code that deduction is linked to. So I can see it's tracking the employer cost in memo code 588. Another way that you can tell which codes are linked to other codes is to run the deduction report. And an easy way to do that would be to come out to the main report screen and then select the reference topic, choose the deductions and other pays report, and then create the deduction report. I'm going to go ahead and just view the unformatted report here just so we can look at it a little quicker. And I'm going to expand the screen, and then notice over here on the right it'll give you a list of what codes the employer amount is being tracked through. So that's another quick way to see a list of all of your codes, as well as tell which codes are linked to other codes. Let's go ahead and go back into the employee's master file. So what would happen if the amounts were being tracked through HR is you would see a medical deduction come over for the employee. So this is a true deduction to the employee. And then any codes that fall in the range of 570 to 599 are what we call memo codes. They are neither a pay code nor a deduction code. They are simply set up to track something in the payroll system. Common examples of memo codes are 401k match. That's not something that you're deducting from the employee or paying to the employee, but it is something that clients often want to track in the master file or track through the payroll system so it can be included on their pay period compensation file or their annual retirement file, and so they can track it through their general ledger. That's a common example of a memo code. Another example of a memo code was when we had the COBRA credit option. Clients would have a memo code that they could track their COBRA credit through. The employer medical amount, that's also an example of a memo item. It's not being paid to the employee, it's not being deducted from the employee, it is simply being tracked. And it can also be set up on the W-2 template. It will be set up on the W-2 template so that it can be printed on the W-2 at the end of 2012. I'm going to go ahead and close down this report so I have a few less screens to be hopping between. Now, alternatively, if you're not using Ascentus HR or if you're not passing benefit deductions from Ascentus HR, it can still be set up in the control file that whenever you add a deduction code, such as the medical deduction code, that it will automatically ask you to enter an amount in the payroll master file for that it'll pop up and ask you to enter the amount for the employer medical. So again, when we link codes, we can either expect or set it up that the amount will be passed, the employer amount will be passed from Ascentus HR, or we can set it up where you will manually enter the amount into the memo code in payroll, or you might have a custom program in place that would be tracking the amount in payroll. The next benefit or deduction that I want to talk to you about is employee HSA. It's the HSA plan. So with HSA or health savings accounts, there's basically two levels. You could either be contributing as an individual, which has a limit of $3,050 for 2011, or you could be contributing at the family level, which for 2011 the limit is $6,150. Now that limit is applicable or combines both the employee's contribution and the employer's contribution. So it's very important that if the employee has a contribution to HSA, obviously the employee's deduction, so let's say that HR passed a deduction of $50. Pretend you're not watching me key that in, because that would come from HR. But then HR would also pass the employer amount of HSA if the employer contributes every pay period. So if the employer contributes every pay period, HR could pass the employer amount. So the HSA is kind of unique, and here's why. On the HR side, unfortunately, the way that the HR benefit plan was created, it doesn't have a field to enter the employer amount in. So you end up having to create two benefit plans for HSA individual and two benefit plans for HSA family. One plan for employee and one plan for employer. And at this time, employer amounts have to be linked to a deduction. Now, since the employee's deduction is already linked to the employee benefit plan, in order to pass the employer HSA amount, we actually end up having to set up yet another deduction code, which we would expect to actually receive a zero amount, because the employee is only going to have their deduction, not another deduction for the employer. But we can link that deduction code to this memo code to pick up the employer amount. I know it's kind of confusing, sounds a little bit confusing, but basically with HSA, if you want to pass an employer amount from HR, you're going to see both an employee amount come over, either for individual or family, and then you can expect to see another deduction code come over with a $0 amount in it. And the only reason that that is being added into the master file, watch if I was to do it manually instead of passing it from HR, it would come over with a zero amount, but it would provide an opportunity for HR to pass an employer amount into a memo code, 586. So here we can see an employer amount can be added. So what we would end up seeing on the employee's master file is a true deduction, this would be the employee's contribution, a zero amount deduction, which is really just there to link to cause the employer amount to come over, which would then be, the actual amount that's being contributed by employer. So another comment I have for you is even if you do not contribute to HSA every pay period, perhaps if you as an employer only make a contribution quarterly, annually, the employer memo code still needs to be in the master file so that it can capture the accumulated contributions, whether they're annual or quarterly, so that it can take that into consideration with the employee's accumulated totals to make sure that combined they do not exceed the annual limit of $350 for single or $6,150 for family. The last thing that we're going to look at on the deductions screen here is this tab down here at the bottom that is specifically showing us just the direct deposits. So I might not have pointed this out earlier, but notice that we have a tab for all of the deductions, which is also including direct deposits, or we have a tab just for the direct deposits. So when you come to this screen here, the direct deposit screen, It just allows you to see a little bit more information about any of the existing direct deposit accounts. For example, I can tell the bank account, or I should say the routing number and the account number. Is it a checking or savings? I can also see if it's in pre-note status or what order this direct deposit is scheduled to come out in. So I can see a little bit more information when I'm on this tab versus the All tab. I can't see the routing or account number or the pre-note box or if it's a checking or savings account. So that's one of the benefits of setting up your direct deposits right here on the main direct deposit screen. Now, Ascentus can provide you up to 10 direct deposit codes. So that means each employee could have up to 10 direct deposits. We typically associate code 471 with a default setup of 100% of net. So this would be the typical remainder account, the code you would use for setting up a remainder account. However, employees can have any combination of flat amounts or partial nets, or partial percentages, if you will. As long as altogether they have 100% of their check allocated or they have a remainder account in place, they'll be assured of not receiving a live check. So let's go ahead and say we wanted to set up another direct deposit on this employee. So I select the next code in the list, 472. Now, by default, per how it was set up in the control file, it's set up to be a flat amount. However, I could make it a partial percent by changing it to be a net calculation method. And then I can simply come over and enter that partial net. Maybe I wanted this to be 25% of my wages. Now, the next thing that I would want to do is come over and select if it's a checking or savings account. Once you make that entry, then you need to enter in the bank or payee information. So this is where you're entering, technically this is where you're entering the routing number. So the system's expecting a 9-digit value in this field. You can then also enter in the account number information, which can allow for hyphens as well. Now notice as soon as I started entering this account information, it gave me this little message here of pre-note. And notice what happened to the start date. It's default trying to set it up with a start date of 1/1 and the year 2100. The reason it picks this funky start date is because it basically is setting it into a pre-note so that it doesn't go live right away. First it goes through a test, and then with the payroll that happens after that test, then it becomes live. So that's what it wants to do by default. Now I will show you how to disable the pre-note if you wanted to, but that's what it wants to do by default. Another quick comment on the routing number field or the bank field is that it is, when you go to try to commit this deduction, the system is going to check this routing number value. It knows what all the eligible banks in the United States are, and it's not going to let you select a routing number that isn't a valid routing number. So you would get the following error message if the routing number you entered was invalid. So what you would need to do is make sure that you do get at least this one piece correct, and then the system would allow you to commit the deduction, and you would see it show up in the list over here. Now what's not happening yet is the system is not testing that the account number is active or that it belongs to this employee. That's what would happen with a pre-note. So notice that there's a column on this tab called pre-note, and there's a check mark in this box. When there's a check mark in this box, the system knows that this is not a live direct deposit. It's going to first send it through a test with your next payroll. So next payroll, it'll send a $0 test to this bank account to test if it's active. If that once that test is completed, the system will automatically clear the pre-note and reset the start date so that it becomes active with the payroll after that. Now, if your pre-note failed for some reason, you should expect to get a message back from your bank or from National Payment. If you use National Payment, you can expect to get a message back notifying you of any failed pre-notes. And then they would tell you what the problem was. If it was a bad account number, if it was an inactive or a closed account, they would let you know what the problem was, and you could come in and make your change. If you change the routing or account number, it'll kick it into a pre-note again. You can then decide if you want to let it go through a second pre-note or if you want to manually uncheck the box and block that pre-note and make it live immediately. Now let's go ahead and set up another account. Let's say this employee also wanted a fixed amount. Maybe they want $125 to go to a checking account, and this, we'll just enter in an account number and we commit the deduction. Now again, new account, so it's going to try to go through a pre-note unless I block it. If I go to block it, it gives me the following warning message. Am I sure that I don't want to have it tested? Are you sure you want to do that? If I say yes, it changes the start date and it makes it effective immediately. Now, when you set up direct deposit accounts, the system is going to take them in the following order. It always takes flat amounts first, then it takes partial percents or partial nets, and then it takes the remainder account. So that's the order that they come out in. Now, if the employee had several partial nets or several flat amounts, the system would let you set the order of those flat amounts or those partial percents. Still coming out, though, in the basic overall organizational structure of flat amounts first, partial nets second, and remainder last. So you can only adjust the order of an account against an account with a like calculation method.